Both gold and silver declined tremendously. In the case of gold, over 1%. In the case of silver, 2.4%. The fact that the dollar is higher today and yields on U.S. Treasuries have gone up had an effect on gold specifically, but not enough to represent the kind of sell-off that we witnessed today. My best estimate is that the jobs report on Friday is giving traders an excuse to either pull profits or limit losses and to get neutral prior to the release of Friday's report. The dynamic drop we witnessed, I believe, has a lot to do with traders unwinding positions more than what the dollar did or higher yields. Hello traders, Gary Wagner here, 12:15 in Honolulu, 6:15 in New York on Tuesday, first day of August, 2023, and this is the Daily Report for Gold and Silver. Gold opened over 2,000 at $2,004.20, traded to a high of $2,004.40 before selling off dramatically, giving up over a full percentile, with the most active December contract currently fixed at $1,981.60 after factoring in a $27 decline. Traders, this first chart is a daily candlestick chart of gold. It shows the tremendous drawdown that gold had, opening at $2,004, trading 20 cents higher to $2,004.40, and then sinking like a rock. It closed near the low of the day. This is after market trading in Australia, where gold is currently at $1,988.10. That is important because it represents the 23.6% Fibonacci retracement. The data set we're using for this retracement begins at the high of the year here, which occurred in May. The reason this number is so high, 2130, is that was the value of the December contract back that many months ago. We know the real price at the time was approximately $2,083, down to this low at 1941. That number was actually 1910, the low that occurred using the current contract month. And traders, that's why this price point, 1985 and change, the 23.6% fib retracement, is a key and important number. A break below there, and we have to look at these bottoms that come in here at about 1980 that also match the low of today. On a technical basis, we see the first level of resistance at 1996, the 50-day moving average. Then above that, the high of today, $2,004, with major resistance at $2,013. Technical support starts at 1980, today's low, with major support occurring from 1950 to 1960. The U.S. dollar had a partial effect on that, with mild dollar strength adding to the sell-off today in gold. The dollar itself had a moderate gain of 0.359%, and the index is currently at 101.995. Since about the middle of July, the dollar has been the nemesis of gold pricing moving higher. It traded back then to a low of about 99, and for a solid 3 weeks climbed up to the point where it is now in reach of the 50 and 100-day moving average. Recently, we saw the 100 cross below the 50-day, and it does seem to be widening, which would indicate there would be downward bearish pressure. However, the dollar continues to track higher. If it continues to move higher, the real level we have to look at comes in just above 103. That is where major support is. The first level is right where these highs came in, the 100-day at 102.08 and the 50-day at 102.26. Lastly, silver dropped by well over 2%, a net decline of over 50 cents, taking the September contract to $24.43. Silver by far had the steepest drop, over 2.4%. You can see that exhibited as this long red line. It has recovered in overseas trading, $24.51, the current bid price for September silver. Support, if silver should continue to fall, occurs first at 24.08, that's the 100-day moving average, 23.94, the 38.2% fib retracement, and at 23.85. All three fairly close together, which means that if silver continues to fall, there is a likelihood that it would find some sort of support, even if it was short-term, between these three price points. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.